in a graphical format that's thrown to you. If we can take this information we're looking at in this visual format and put it into some sensible interpretation in our own heads that's not convoluted and complicated, we might be able to understand what price is trying to tell us. Okay. So there are many players in the Forex market. There's hedge funds, there's large banks that all have complicated computer systems to constantly monitor every inconsistency between currency pairs. There's the commodities market with traders on the floor and big commodities brokers. And of course, we have the London Gold Exchange. We have all types of exchanges all around the world. With so many investors and so much money exchanging hands each day, the trend and flow of capital has become important rather than trying to identify a mispriced asset. Okay, scares the hell out of you, doesn't it? It worries me. How am I going to do I need to go to 10 years of school and get special licenses and have all this complex software to understand what asset I might want to invest in for my pension fund, where I should have my 401k, what's the difference between high risk and low risk? How do I get a grasp on this stuff without spending weeks and months and years mastering it? Now, it all comes down to determination, hard work, practice, individuality, practice again, hard work, repetition, observation, and experimentation, and again, hard work. But if we can take all of this stuff and put it in something you already understand and know, so you don't freak out, so that you feel comfortable looking at a price chart. You feel comfortable trying to understand what the price movement of Facebook is trying to tell you, whether you want to buy shares or whether you just want to understand whether Facebook's going up or down. So I've taken something that we all can kind of understand. Architecture, not designing and building architecture, but we all know about 4-story low-rise office buildings. That's what we're going to talk about generally today. We know about high-rise apartment buildings and mid-rise buildings. We know about skyscrapers. And what we know about is how an elevator moves up and down in all of them, don't we? I mean, we're not talking about the mechanics of an elevator. If you want to go up to your friend's apartment, they live on the 26th floor, you get in the elevator and push 26. You go into a high-rise hotel and they give you room, on the 30th floor. You go in the elevator and push 30. Maybe if you're going into the Empire State Building, you have to get in the elevator that takes you to 29 and get off at 29 to get on the next elevator that takes you up to 47. But it's not complex. It's something we all understand. Children can get where they're going on elevators. We understand basements. Some buildings have underground parking lots. Some buildings have all kinds of things. Some buildings in New York have subway stations underneath. And then, of course, we have houses where we have our basements with our washing machines and dryers. These are all things that we know about. So what I've done is I've gone and looked at price charts, and I've realized that we can tell stories on price movement, stories that we understand. We have 4-story buildings, we have mid-rise, we have high-rise, we have elevators, we have underground parking, basement. And all of this is seen in the charts on an asset. Look at this. I would look at it right away and I would say, oh, look at that. That's a high-rise trade. That looks like an elevator going from the penthouse all the way to the basement. Or here we could call it elevator trading. You're riding the price up the elevator. And here we call it the 4-story building trading. Okay. And like I said, this is the one we're going to look at today. Now, what we're looking at is a 4-story office building that sits on the corner. Let me get a better picture of it for you. Sits on the corner of any busy metropolitan city. Maybe it's got underground subway. We know it's right on the main street where the buses stop. We know it's where the above ground mass transit stops. And it's a big building. It covers a whole square block in a major city. We see them all the time. Now, it's not a high rise, it's a low rise. And what do we see by just using our eyes and our acumen? We haven't looked at any charts. We haven't looked at any market. I'm not talking about an asset. I'm talking to you going in the morning, getting off the bus, going to your office. Now, when you get off the bus, you see that building across the way. It's been there for a long time. And you know, on the ground floor, it's got a dress shop. It's got a small, drugstore. Inside, you know, there's a couple coffee stands. There's a little bakery stand. There's probably a Starbucks inside. There's a place that sells sandwiches inside. But it's not a shopping center. It's just a one floor retail of a lower retail floor of a building. You also know, based on the signs, that there's 3 levels of parking down below. So they got a parking garage. But you know what? What you don't know is what's upstairs. Now, you've observed it from the outside. You've been, like I said, you've been taking that bus to your office for the last 10 years. You've observed it all the time, but you still have no idea what's in there. So today you have some extra time. It's a little chilly outside, so you're not going to go sit on the bench. So you got your coffee in your hand. You got it in the ground floor of that building. And you look across the building. It's very quiet. And you look across through the retail area, and you see a bank of elevators. So you walk over, and the elevator door opens. So you step on the elevator. Now, you don't do anything. And I know there's a long story, but there's a reason for this story. Okay, because we're going to apply this story to financial charts in a minute. So get in your head the understanding of this building. So let's say today I decided you're gold. So you're a bar of gold with 2 feet. Sounds like it came out of a cartoon. You got no hands. So you get on that elevator. I give you one hand because you're holding your coffee. You get on that elevator. The door closes, and it goes up to the first floor. Door opens. You look out the elevator because you don't want to get off the elevator because you don't know if you need a code to get back on or how, you're, as long as you're inside that elevator, but it may be, you need a passcode in a lot of these buildings to get up and down before the office is open or whatever else. So you don't get off the elevator, but you stick your head out and you look around. And you see it's beautifully carpeted in mahogany walls and all of these high-priced doors. And you can see these little professional signs. And you see there's some doctor's offices down that hall. You see there's some dentist's office down there. You see the accountants over there. You see even law firm. Because they all got their little plaques hanging offside the elevator. Very proper. See a little lobby. Oh, very dark and quiet and recessed lighting. Yeah, must be very expensive doctors, lawyers, and accountants here. The door closes, and the elevator moves up to the second floor. It opens, and what do you see? Well, the second floor is a little unusual because it's got like corresponding doors to the downstairs, but there's no plaques, there's no anything. And there's a sign that tells you to enter any of the offices. You need to go to the floor below. So you know all those offices inside are 2-story offices, but you have to enter through their main reception area to get upstairs. Okay. Door closes again. Elevator goes up to the next floor. Door opens. So technically you're on floor 3. Door opens and you see a sign, a little like that says law library with a little arrow. You see conference rooms 1, 2, 3, and 4, and you see a schedule on the wall. And you say, oh, there's a conference scheduled at 2 o'clock. And you see the name of it, some highfalutin thing. Okay, and the door closes again, and the elevator goes up one more floor, and it opens. And what do you see? You see sitting areas. You see little chair arrangements. You see vending machines, coffee machines. You see the balcony. You see the doors, and you see the smoking areas outside on the balcony. So it's where the employees, basically, of the building, not the visitors of the building, but it's not closed off, but it's not It's where the employees bring their lunch or their snack, or they go up to have coffee on their break, and where they go smoke their cigarettes. Door closes back again, goes down to the ground floor. Now, yes, you had to join me for this story. Okay. Sorry if it bored you a little, but it's not meant to be boring, because this is the same observation we do of an asset when we look at a chart to try to understand what price is doing. Now, if we can get away from this scary thing about price and the value of an asset, where it's going, and put it into something we understand, maybe we can interpret it. Now, let's go back to my building again. So we've done some general observation. We haven't even gotten off the elevator yet. Sipped your coffee going up and down, haven't seen another living soul, haven't you're still on the elevator. The elevator door closes, goes down to the basement. Door opens there in the basement, and on the elevator you see parking 1, 2, 3, and 4, but the door opens at the basement level, and you see all the mops and the brooms, the cleaning people, and the trash bins, and all of that kind of stuff. Door closes, goes back to the lobby. Now you look at your arm with your 1 cup of coffee, because you don't only have one arm, and you still have more time. You don't know how you got to work so early. But now you observe and you start to think, okay, well, it's early in the morning. None of the housekeeping staff is in. So that's why the elevator isn't, there's no people on. There's no women with buckets and no cleaning guys pushing brooms and mops and vacuums. And I'm early for work, and I go into work early. So the people that work in those luxurious offices on the first floor haven't come in yet, and their staff hasn't come in yet. But slowly, it's getting towards 8:30. People are going to start arriving for work. So I can guesstimate, if I stayed on this elevator any longer, people would start getting on it, and they would take that elevator up to 1, most likely. Very few people would stop on 2. There's no conferences scheduled until afternoon, so nobody's really going to go to 3. And nobody's come to work yet, so maybe nobody's ready to go smoke yet. So you stand in that elevator a little bit longer and observe, and 8:30 rolls around, and a couple women and a man get on the elevator. They push 1, they all get off, they all say good morning to each other, they all get off, scatter their own ways. A few minutes later, some of those people get back on the elevator. Now, where do you think they're going? Well, they're going on the up elevator, so they pushed 3, or they pushed 4. Because they're going up to the roof deck, because they're going up to have their morning coffee. They're going up to have their cigarette. So you take and stand there on the elevator like a fool, riding it up. They get off, and the elevator goes back down to 2, back down to 1. Some other people get on a 1. They go down to the lobby, because they go over to the donut shop. They go over to the coffee shop, and they're going to come back in a few minutes to take that elevator either up to the roof deck, or they're going to take that elevator to the first floor, to their office. Okay. What did we get this? This was simple analysis. Observation, time, and intelligence, and experimentation. Now, you noticed that there's P1, P2, and P3. Well, if that elevator starts going down, there's a good chance at this point it's going to go to P1, P2, or P3, because the people that are parking in the garages are going upstairs to get their coffee or going to their offices. Now, you also notice that the elevator, the conference room has a conference scheduled at 2 o'clock. So if you stayed on an elevator and it's 12:30, 1 o'clock, the odds and probability increased and increased and increased that elevator is going to start stopping on that conference room floor. Also, 1 o'clock, 12:30, 1 o'clock, you're going to see lots of traffic getting on the first floor, taking that elevator up to the roof, because they're taking their lunches upstairs. They're going to have their lunch break. They're going to have their coffee, going to use the vending machines, going to sit outside in the sun on the balconies, and they go back to work. But also, there's a lot of chance that elevator stops on 1 is going to fill up with people going down who's going outside to have lunch. but this was observation. So price action is the movement of the price on a chart. And the one thing about price action, it never lies. It's what it is, when it is, what it is. But it's up to you to interpret what price action is telling you or to understand what it's doing. Price action is a form of technical analysis that focuses solely on past prices that have traded in the market. Price action trading is the discipline of making all your decisions in trading from a clear price chart. This implies that there are no lagging indicators present except for perhaps some moving averages that may help determine dynamic support and resistance areas. What are dynamic support and resistance areas? These are like the floors. You know the first floor, the second floor, and the third floor. You know the elevator, the building's 4 stories high. You know there's a basement, a P1, a P2. These are the levels that the elevator is going to stop at, or these are the support and resistance levels. The average is, well, between 9 and 10 o'clock, how many times that elevator went to the first floor and then came back down, as opposed to going to the second floor. Well, all the trips the elevator took, 90% of the time, it stopped at the first floor in the morning. That's the average. So all financial markets create data concerning the movement of market prices over varying time periods. And this data is demonstrated on price charts. Consider that a price chart reflects the belief and action of all market participants, either human or computer, trading a market during a particular period, and those beliefs are displayed on a market's price chart in the form of price action. Now, since economic data and other world news and events are the catalyst for price movement, we do not need to analyze them in order to trade the market successfully. All economic data and global news that causes price movements within markets are eventually reflected in price via the price chart and price action. As a market's price action reflects all variables influence that market for a given period of time, exploiting lagging price indicators like MACD and stochastics and oscillators and RSI can be a waste of time. There are traders and investors who might say that price action movement provides all the information and signals you need to design a profitable and high probability trading system. Those signals are collectively known as price action trading strategies, and they deliver a way of making sense of the market's price movement, as well as assisting in predicting its future movement with a high degree of accuracy in order to grant you a high probability trading strategy. Surely, most traders that end up making it as a trader will find the specific study of technical analysis eventually. But it's usually only after multiple disappointments and failed attempts at building indicator-based strategies that zigzag when the market zags and allow me to elaborate a little bit on my earlier statement. Price action will never lie as traders because it purports to tell us what will happen, but rather it tells us what has happened. Price action's already happened. The move has already happened. The elevator has already stopped at 2. But by gathering this data through observation, simplistic observation of movement and timing and understanding, you can start making intelligent decisions. Now, price doesn't always move in a 4-story building. Price might be moving today, or in the price action on chart might resemble more of a mid-rise office building or a high-rise office building. Well, then you can then start applying the same idea of all those elevators going up and down in a hotel. Well, let's take a very complex place, Las Vegas. It's the city that never sleeps. There's gamblers going all day and night. There's casinos open. There's restaurants open virtually 24 hours a day. There's shows that go on until 3 and 4 in the morning. Now, let's use the Bellagio Hotel. I don't know how many stories it is, 30, 40,000 rooms. But first thing, when you walk over the elevators to the Bellagio, you're going to see levels 1 through 10, 10 through 20, 20 through 30, and that's the specific elevator you can get on. So first you have to get on the elevator that goes. Now, isn't it very annoying when you're waiting for the elevator that goes to 1 to 10, and that elevator going to 20 and 30 keeps going up and down, and you're still standing there holding your hands waiting for your elevator door to open? I hate that when it tells me to take elevator A. And I'm waiting and waiting and waiting, and D's opening, C's open, B's opening, and I'm still waiting for A. But I'm observing. And once I've ridden that elevator 1 through 10, and I can see all the 39, 49, 59, $95 a night rooms are on those floors, and I know there's a lot more denseness of population on those floors, I can start evaluating how that elevator is going to move. When I realize that the high roller suites are in the 20 to 30 range, and then the real expensive stuff's in the 30 to 40 range, well, the 30 to 40 range is going to have less traffic in it. And I'm not going to say statistically all those people can go to bed at a more normal time, because I have no idea who those big high rollers are. But then you have the high rollers that tend to be on the 20 to 30 who tend to be up all night at the casino table. So I can group what's happening. I can start, even though it's a completely different set of observations, by using my eyes and observing and using my brain and analyzing, I can come up with something that will help me decide how often that elevator is going to stop where, and where it's going to go, and why it's going to go. Because price action strategies can be traded in any financial market or at any time frame you prefer. It's advisable that traders concentrate their efforts on trading higher time frames first, with the main time frame being the daily chart in particular. But the answer is very simple. Price is the essence of any financial market. It resembles math. If you do not understand the term of the task, you will not be able to provide any solution. Thus, if you do not know how to read the price action of a market, then you are unlikely to know how to make sense of what a price chart is telling you. As a result, you will not know how to trade using price action. Every trader who tries to convince you that it's easier to trade from indicators or trading software other than price action indicators is unaware of the reality of the markets. The reality of the market is that current price is the ultimate result of all the variables connected to the market. What is the point in concerning yourself with analyzing anything but this price movement? Now, traders tend to fall into traps of using unreliable indicators and robots simply because the people selling them exaggerate their effectiveness. To fully understand price action, it's important to comprehend that there's no easy way to make money in this world. Remember that any shortcuts you take and believe you have found in the market are merely temporary. By learning price action, you are giving yourself a better chance of trading success. Now, let me pop up some charts on our screen here. And we're going to see if we can look at a live chart and make some interpretations. Now, what we're looking at is the live Euro US dollar chart. And this is my trading chart. These lines going across the chart are known as what are support and resistance levels. Now, today in class, we don't have time to teach you about support and resistance. But support and resistance are where price in the past, when the price of that asset was trading in this range in the past, where price had a difficult time going up or where price fell down. Sometimes we're defined as swing low, but they're historical prices. They can go back years ago. Now, I've color-coded all my support and resistance lines because this is my personal key. So I know how important that price level was. I know how old that is. I know if I should be paying major attention to it or not. Okay. But we can see as price has been moving down, steadily, if we think of these support and resistance levels as the floors, because if we're talking about price moving in an elevator, what is above your head when the elevator is going up? It's your resistance because you have to break through that ceiling to get to the next floor. What's holding you up is your support. It's the floor below your feet. And each time you move to a different floor, you get a new level, a new floor with a new floor below it and a new ceiling above your head. When that elevator turns to come back down, the floor that was below you is the ceiling you're pushing through to break down to the lower floor. So what was support in one direction is resistance in the other. But these can help you interpret price action. Look, if we said this was the top, third floor, this was the second floor, this was the first floor, this was the ground level, we could actually interpret something that was happening with price action here. Now it's coming down to the ground level. We're hoping that we see it moving up to the first, second, or third floor. But it might go to the basement. But we'll have to look at that. And we have to observe that. Now, this happens to be Bitcoin, and Bitcoin's on a tear. But each one of these have been floors and seal on each the move going up. They were defined by historical price action when Bitcoin was trading at this price in the recent past. Now, each one of these is defined a step, but this Bitcoin's rise doesn't look like a 4-story elevator because it's going straight up. So what does it look like? It looks like a mid-rise apartment building where the elevator stopping at each floor, dropping off the people who live on the floor. Delivery's going up to the next level. But it's not going up like a high-rise elevator, it doesn't look like an elevator from a huge high-rise building or a casino hotel. It looks like it's a residential, apartment, mid-rise. Steady steps up. And by observing this elevator, we might be able to understand what price is trying to tell us. Long-term and short-term. And because we're always looking to interpret what prices say. So we can see resistance. We can see when price breaks resistance. Because even though we'd like to think that price moves like this, so whether you're looking to invest or trade, when you're learning, it looks really easy. But in reality, it's a jumbled mess. So when you can put something semi-logical or a story to the jumbo mess, it's easier to try to figure out what that jumbo mess is telling you. And we do this by having patterns that we can explain. Because price gives us all the clues at all times. And we will see reversals when the elevator's reversing coming down. We can see when the elevator's traveling up. We can tell by the influx of people. If you were on that ground level and 8 people got on an elevator and the elevator's moving up and moves up the first floor and 5 people get off, well, that elevator's going to move up. And where's it going to move? The second floor doesn't have anybody. Third floor, there's a conference room in the law library. The fourth floor, the top floor, is the smoking lounge area. Well, maybe some of those people are coming up to use the law library. Or, they're pretty much going up to use the coffee lounge and the smoking balconies. Okay. So we come up here and we can see the reversion. Okay, when we hit that balcony, we know that elevator's got to come down. Now, when it starts going down, does it go to 1 and then turn around and start moving up? It comes back up to that rooftop and then comes back down to the lobby. Okay. Our observation can help us understand exactly where a price is trying to tell us on its journey. So instead of making the world very complicated, we can make price easier. And then we can, if we want, we can then start interpreting what is happening in more detail. But I use price action trading essentially. I use other pieces of information to determine at what price I'm willing to enter a market, where I would get out of a market, where I put my stop loss, but they don't make my trading decision. My trading decision is always made by price action. Price action tells me what I want to do. Do I want to buy? Do I want to sell? Do I want to enter the market? Do I not want to enter the market? Now, due to the repetitive nature of market participants and the way they react to global economic variables, the price action of a market tends to repeat itself in various patterns. These patterns are also called price action trading. And there are many different price action strategies traded by different ways. These reoccurring price patterns or price action setups reflect changes or continuations in market sentiment. In layman's terms, that just means by learning to spot price action patterns, you can get clues as to where the price of the market will go next. And then you can start using things like the candles to break down and decide where you would want to enter the market. You can apply specifics, but to be honest with you, just being able to read the market by using price action will get you in the right direction. And then you start learning all types of price action setups and signals. But you just need these clues, because the first thing you have to do is decide whether a market's going up or going down. Then you have to decide if you want to enter it. Then you have to decide at what price you're willing to enter it and where you want to get out of it and what your risk would be. So what we're looking for is price action signals to give us some confirmation for an entry into the market. We will see in a little later, as you learn more about price action confluence in the market and how to find high probability entries. But for now, just focus on an individual price action understanding of the charts so that you can see what is happening in the marketplace. Understand the trends, how the market is moving. Okay. Understand how to evaluate and see what it's trying to tell you. So you may have a good understanding of the basics of price action trading. One thing that I didn't touch on in this class is what time frame you should be beginning to learn to trade on. All of the charts in this lesson were made on the daily time frame and the 1 hour time frame. And it's important that you first learn how to trade on the daily charts. That's not actually entering a trade. Looking at the chart, only concentrate, find your buildings, interpret what the market should be doing on your daily charts. You don't need to break it down to 15-minute charts, 1 hour. Market's moving way too fast. Look at the daily chart. Try to interpret what price was telling you, how it was riding up and down, where the floors and the ceilings were, and then apply that to the next day and the next day and next day till you get it down pat. And then you can start understanding price action. But the reason is simple. The daily chart gives you the clearest and most accurate view of a market's price action. And the lower in time frame you go, the more random market noise is there. So give it a little bit of thought. Start practicing. Start trying to see what price is telling you. Start understanding what price action is all about. And stop being scared of looking at price charts. Thank you very much for joining us, and we'll talk to you again real soon. Bye now.